While many have been celebrating the 4th of July, there's been a lot of interesting news happening in the markets. We got our US ISM manufacturing index numbers coming at 53.3, setting a decent expansion phase for the market. Oil still keeps going lower, creating lesser inflationary fears. While the market's price in one more rate hike this year, Trump thinks that's a derangement syndrome happening, and SPX and Russell continue to make its move up, but AI narratives with Micron Tech seems to have a recent downwards move. A lot of this discussion, Bitcoin's recent price action as well, we will discuss in this video. Hello everyone and welcome to Strategic Markets, your place for technical and fundamental analysis all at once across many markets. And today, to start off with a bit of a data point that we have is our ISM Purchasing Managers Index. That one came in at 53.3, touching this 200-day SMA. Now, there was an expectation for this to be at 54, so the market was undersold on that a little bit. But you have to take into consideration a position like this where we're making a higher high and a higher low. We're still at a decent expansion phase. If this trend continues to go up, that will be generally good for the economic expansion itself moving forwards. CNN is in Tehran and they are covering the funeral of Ayatollah Khamenei, which is happening on July 4th as well, which is obviously not a coincidence at all. But yes, in this particular case, CNN has decided to go on the 4th of July and cover that. And, generally speaking, Iran does not allow any media from America to have this covered, but obviously they wanted to show that they're doing this and they wanted Americans to be across this, so they let this happen. And CNN, being the one entity that is not a fan of Trump, has definitely gone over there and covered this, but also done their due journalism as well. So opens it up for view. But on the top of America, Iran, which is thankfully not the first story we discussed today. I'm glad that we can, slowly start moving away from that event. We can look at. So,
Come on, what's going on there?
please, I don't want to talk about that event consistently. We are looking at Brent Crude's price action, and Brent Crude has been doing very well. We are coming back to pre-war levels, just under the $73 level in our Fibonacci, and we are coming below it for testing resistance. Let's see if we can go lower. And when I ask myself the question, okay, if we are coming back to pre-war, has Strait of Hormuz opened up to pre-war levels as well? Well, if you have a look over here, you can actually see in the last 24 hours, only 25 ships have transited from the Strait of Hormuz, which very interestingly is only at 41% capacity of what normally used to be. So it's still getting there. They're not fully there yet, but yeah, it's definitely getting there in terms of going into full capacity. But yes, it is restricted. At least it's not completely shut off. So that's definitely some good news there. Another interesting aspect is Kevin Walsh has said that inflation expectations have come down. And we did see last week that stocks, gold, silver, and crypto are all technically moving up for this. We'll cover that in a second. But the Fed still has, well, the market is basically pricing in one more rate hike this particular year. I don't think that's going to be personally happening from my opinion, not financial advice, of course. But yes, in this particular case, the market is still pricing that in. And Trump basically says that we are getting good economic data that shouldn't hurt the markets, that there's strong economic reports showing that stocks can go lower because investors fear that there could be a delay in Fed rate cuts. He's calling this a derangement syndrome around inflation. So look, who to trust, whether it's Trump or when there is general market, honestly speaking, I would not
Really looking in the mirror.
I would not like to trust either or the or, to be honest, because the majority of the market is generally not right. And well, Trump said the war was going to be over 3 months ago. So, it's definitely conflicting. But hey, from the look of it, and in terms of price action, the SPX did have a green week after 4 weeks worth of red. Now, 4 weeks worth of red does show a negative downtrend. So I wouldn't just consider this to be an engulfing situation and that we could have a trend reversal over here. We still got to see out how the next couple of weeks plays, but stability around this particular area could be good. Russell at a similar situation, except that it's hit resistance at the $3,000 level. So it wouldn't surprise me if this sticks as a psychological level, and whether we stay range bound over here or whether we come to touch this particular trend line somewhere around 2,800 or so, would just have to be a review on things and how liquidity progresses ahead. But one thing I'm glad, and that I'm glad that we called this particularly out, is this move on Micron Tech right over here. We were calling it last week, and we were basically saying, hey, look, Micron Tech looks a little bit overheated, and that you guys should be careful if you go ahead and progress with this particular move. But yeah, it just looks like about a near 24% drop has occurred between 1.5 weeks worth of price action. So if you actually caught on to that move, or if you're following that along with us, please drop us a like. It goes a long way. I don't want to say I'm an oracle, but sometimes I do get these things aspect, and I did believe that Micron Tech was overheated, considering over 84 days or so, it did make about 300% move up. So being in SanDisk or Micron Tech right now, I'm not saying it can't go up from here, but do you really want to be in extremely overheated positions? That's the question you can ask yourself. Let's cover Bitcoin's price action first. So Bitcoin's price action over here, we have been talking about this 14-year trend line. And look, not gonna lie, on the weekly, this particular trend line has broken down, and we are going lower this particular trend line. I'm particularly waiting on the monthly itself to confirm closure, and if we keep making lower high, lower lows, then it is a point to be concerned. But hey, at least on this particular week, we have taken over the 200 a week MA, which is the red line over here. So that was something positive that happened 10 a.m. this morning in Melbourne time. So we'll see how that particularly goes. And another event that we've been talking about consistently is this particular lower lows in the price action, but higher highs in the RSI, which confirms an RSI divergence. So if this particularly plays out, I can be hopeful that by the end of July, we do have upwards price action, probably even coming to the 70K level. This is a bit hopeful, but anything can happen with the right narrative. And I'll talk about this particular narrative as well, but you can see that, we have been playing into this particular descending wedge pattern over here, and we had a bit of a breakout. Now, for the descending wedge, generally it is the height of the particular wedge itself that, calculates us a little bit of a target. So a move to 67K possible. Whether it plays out, we'll just have to see. But yeah, we can see a little bit of red action on the daily right now. But at least we did on the weekly close above the 200-week MA, signaling some control back in the markets to not position ourselves completely bearish. But yeah, there's just a couple of things to play out on the next couple of weeks. And those narratives could be relevant to the Clarity Act. So we just saw it come through that the US law enforcement just stopped blocking the Crypto Clarity Act. So these were two major law enforcement, companies and entities that in the last 24 hours have basically come out and said that, hey, we don't want to block this act anymore. We actually do believe it is progressive for the crypto industry. So that could be fairly good. Other aspects are Taiwan has passed their key crypto framework as well and ending regulatory uncertainty. So if Taiwan is, bringing out regulatory actions as well, that's going to push relative entities like China to go ahead, obviously America as well. And very recently, even Russia is doubling down a little bit too. So Russia has come to the table and they have said that, hey, they're basically going to launch their digital ruble on September 1. What blockchain they do it on, who knows? How they do it, who knows? But meanwhile, Bitcoin and crypto are expected to be legalized for international trade as well. So that's a little bit of hopeful news, but we'll see how that particularly progresses forward.
I seem to recall, actually, talking about the digital ruble, I seem to recall a while ago there was talk about XRP being involved in terms of support of that by the Russian government. So that might be something to keep an eye on.
So to Steve's point, if the digital ruble does progress ahead on XRP, then anyone holding XRP over here, well, you know what? I hope your bags go to the moon. But with that being said, yes, just take into consideration, but you just letting you know from a general geographical perspective, within July, a lot of progressive news has just come in to, start putting some fuel under the crypto markets. So just like oil is, back to pre-war levels, but the Strait of Hormuz hasn't come into those levels as well. Is it price manipulation or not? I'd say so, but who knows? But in the case of crypto as well, just after the 1st of July, countries gathering together to push through regulatory clarity could be a bit of a narrative shift as well. And we can see Ethereum bouncing off that too. This particular W pattern that we've gone down and up, now we're coming to the top of that W pattern over here. If we progress upwards from here onwards, we have a bit of a confirmation of that particular W pattern, and that could be a little bit move to come back into this particular weekly trend line that we have had for a bit of a while to possibly take on the $1,900 level. A bit hopeful, but let's see how the narratives go. Because even for Ethereum, the European bank is looking to put the euro on Ethereum. So basically a Euro XT MiCA compliant euro stablecoin. So if stablecoins come in for the euro world as well on Ethereum, and concerning USD is also on Ethereum for stablecoins across other blockchains as well, this could be really good news, right? And some of the price action patterns that I've also been trailing on other tokens recently, I was doing this today, is Ondo Finance. We've been talking this about a long time now. In the past, I was hoping that this particular pattern right over here, this drop, would be a bull flag and it would just go up from here. But hey, look, it took a bit of a longer time to consolidate, but now we're again in this descending wedge pattern over here, and we are looking like we could possibly have a move up. And the target for that is I've drawn, which is this particular move upwards, this particular, I call it like a flagpole, and then a drop downwards. So if that particular goes ahead, then my target of about the 55 cents mark still holds, but we're gonna need a definitive breakout with good volume out of this particular pattern for that to hit. So I'm not just sitting over here with my hands. If I get a breakout on this particular pattern, you'll be the first to know. But all these, recent certainties with the Crypto Clarity Act pushing and all these countries pushing for regulatory clarity, and Ondo very recently has basically said that this week trading changes forever. Turn notifications on. And very recently, they've actually been tokenizing blockchains. They put Micron Tech on 24-hour token trading in America itself. So previously, they were only allowing international trade, but now they've gone ahead and now they're doing national trade within the US as well. So which is one of the reasons why I'm a massive follower of Ondo Finance itself. And if they're tokenizing the blockchain, altcoins are risky, so please manage your risk carefully. And this is not financial advice, but yes, Ondo is one of those projects that I back and I dollar cost average into. So if it's forming this particular pattern and it has a bit of a breakout and it's supported with the clarity, perspective, and narrative, it could have a good move. But I will leave that for you guys to think about and see how you want to position yourself relevant to altcoins. And we can move on to Steve for his technical analysis, please.
Well, thank you very much for that, Yash. Great to have you back on board again too, and I hope you enjoyed your day off earlier in the week. Yeah, we'll just get straight into the charts here. But let's take a look firstly at this chart, which you actually alluded to as well through a bit of the discussion as well. But this, I think, is actually really, really forming to be chart of the week, in my opinion, really as to what actually has happened throughout everything that's been going on. Reason why I really bring this one up is because this, I think, has been essentially central to a lot of the trading and a lot of what's been going on with virtually everything in terms of industry trading, yields, interest rates, the whole works of everything that's been going on throughout the week. And the reason behind it is because during the week, or towards the end of the week, I should have said, in terms of how we actually left everything at the end of last week, is in terms of the bonds, which is what this chart is that you're seeing right now. At the end of last week, this is where we were sitting with the bonds. We were sitting right above this green VWAP, the yearly VWAP here at this point. It was higher highs and higher lows at this stage. The bonds were looking pretty good, pretty strong, above the majority of the moving averages, apart from the 200-day moving average being that red line. So things were looking fairly good. Then things turned around as we were basically looking at things throughout the shortened trading week leading up into Independence Day at the end of this week. In particular, Tuesday's trading day was a doozy. It actually went right down through this VWAP, right down through the 100-day moving average as well, and also through the prior support level formed from back in January. So much so it even went straight through the short-term moving average and even down through September lows pretty much towards the end of the week. Now, why was this so important? Well, in terms of the TLT, The TLT is basically the ETF of the long-term bonds. Now, there was a dividend paid on this ETF, which was paid on the Wednesday. Now, as you can see from down below, that was to the value of around about 32 cents per unit. But the actual ETF itself went down 90 cents on that particular day on the Wednesday. So the actual value of the ETF went down much, much more than the value of the dividend itself. That, to me, is not all that fantastic. So people were actually selling off on the bonds more than the value of the dividend itself. Overall, that basically suggests that people are still selling off the bonds themselves at a higher rate than what they're actually paying in terms of the dividend itself. Technically, that really shouldn't happen in terms of anything. In terms of anything to do, say, like bonds, shares, anything on those lines there, because there generally is less of a favour towards that particular instrument when you see that occurring. Now, in terms of, say, the bonds themselves, we know that the bond market itself is actually a lot larger than the share market. When you've got something that needs to actually support the share market in itself, such as the bond market, you really want to see them running in tandem, doing well with each other and supporting each other, especially when you actually have the bonds running inverse to the interest rates. And why is that important in particular? Well, if the interest rates themselves rise and the bonds are falling, then essentially you're losing support in terms of those particular areas of the share market that rely on borrowing. And that in particular is an area of the market such as the small caps in particular, being the Russell. So firstly, let's have a look at the interest rates themselves. How did they fare with this decline in bond market over the shortened week? Well, in particular, you can really see, especially towards the end of the week, the rates themselves, and this chart here is actually looking at the 10-year rates themselves, those rates were actually rising towards the end of the week, as you would expect with the bonds themselves falling. So you can see that these are actually rising and above all the short-term moving averages, and really, really importantly, the 50-day moving average being that blue line. So we've got a tendency for the rates themselves to be rising, which is most likely going to be starting to put pressure on the small caps in particular. So if we take a look at the Russell being the small caps, it doesn't look too bad when you're looking at this particular chart. But if we really, really dig deep, we're starting to actually close beneath the short-term moving average, being the yellow line in particular, being the 8-day moving average, the EMA. But you're also starting to form lower highs on the lagging indicator on the left-hand side here on the Ichimoku curve. So just some warning signs. I'm not saying doomsday or anything on those lines at this point, but it can explain the fact of a little bit of underperformance here in terms of the Russell, especially when we compare to the large caps in terms of the Dow. Now take a look at the Dow compared to that last graph we just looked at. Much, much more high performance here on the Dow in terms of all-time highs in relation to the Dow. Just remembering that the Dow is the top 30 stocks in the US market. And these are the big, big caps. So overall, we've got a lot more performance in terms of these stocks compared to, say, the small caps. So we've got more and more sector rotations still occurring in these markets. That's the big thing to really, really keep in mind. So we've got a lot of this type of stuff going on. And we've still got more and more rotation going on as well, especially when we take a look across at the SPY and the Qs. Now, the SPY, yes, there is still some rotation going on here. These are the top 500 stocks in the US market. We didn't reach all-time highs here, but we still had some improvement towards the end of the week. There's a little bit of rotation going on into here. Obviously not as much as into the Dow, but it's not so bad here. But when we take a look at the Qs, being the tech-laden stocks, you can obviously see there's rotation coming out of this. And this leads into exactly what Yash was saying in terms of, say, areas like Micron, for instance. And I'll show you a chart of Micron in a moment as well too, which is confirming even more of what Yash is saying as well too. But before we get into that, take a good look at this chart here in relation to the Qs, because as you can see, we're below the short-term moving averages here. The yellow and the cyan lines there, you can see they're both the short-term moving averages of the 8 and the 15-day EMAs. And we're now also testing the 50-day moving average being this blue line here. But of really, really big importance, we're actually below both the Tenkan-sen blue line and the baseline here on the Ichimoku curve, and also your lagging indicator has now actually broken below that Tenkan-sen blue line as well. So we've got warning signs all over the place in relation to the Qs. This is really, really big. Now let's have a look at Micron. If we look at Micron on the short-term daily chart, as we're looking at here, remembering that Yash actually showed you the weekly chart before, you can really see some big warning signs going on here with Micron. This is where the earnings day was. Okay, this is the earnings day. Now, you've got to remember, with the earnings of Micron, it was released after hours. So the following day was when it actually reached its massive, massive high, where it got up to $1,255 at the high of the day. Shortly after that, being a few days afterwards, it's actually now come down where it closed on Thursday, Hilton trading week last week, at $975. So it lost almost $300 over the course of just over around about a week. Quite a lot of cash, right? I'm sure you will agree. But the biggest thing to take a look at here is the lagging indicator, lower highs and lower lows. Massive, massive. And it's broken through the Tenkan-sen blue line and the baseline. Quite a lot of action going on this chart. It's broken through all of that, broken through short-term moving averages as well. So a lot of activity going on over there. The chart's basically broken overall. It would have to make a massive recovery to get above all of that and above all of these indications here as well and start forming higher highs and higher lows of the lagging indicator. So a lot going on here in this chart, even though it's still above the cloud. So a lot of weakness going on there. Another chart I wanted to bring up as well was Nvidia. Now, if you take a look at this is an absolute dog's breakfast. We're right down, all the way down to the VWAP on this here, and it's testing that area there. But as you can see as well, lower highs, lower lows on the lagging indicator, and it's gone below the cloud. Real mess, a real weakness overall here. The lagging indicator went below both the Tenkan-sen and the baseline, massive signs of weakness. Your Tenkan-sen crossed below the baseline as well, massive sign of weakness. The Tenkan-sen still below the baseline, massive sign of weakness, weakness all over the place. This is a darling stock of the entire market overall. Okay, everyone loves Jensen Huang, but unfortunately, this is really showing signs of weakness all over the place and is really, really struggling unless it really bounces off this VWAP and starts making a big recovery. But as you can see, below the short-term moving averages as well, and would need to make massive recoveries. So the Qs are in real strife. They've lost a lot of strength, but we've got a lot of recovery to do. So you can really see a lot of sector rotation is going on at the moment, more towards your large cap stocks, but we're moving away from tech at this point, which supports Yash's narrative in relation to the AI narrative starting to weaken or has weakened quite considerably for a large period of time. Let's now take a look at some of the other areas of the market, particularly areas such as the precious metals. What's been going on around there? Well, there has been a recovery, like Yash had also been saying as well too. There's been talk about gold and silver starting to improve. Are we out of the woods 100% yet though? Well, it looks as though things are starting to improve, yes. We're starting to get towards recovery above the short-term moving averages, but are we really recovering 100% yet? Until we start forming higher highs and higher lows off this base, wouldn't really say 100% certainty that we are out of the woods with 100% certainty at all, because we're really starting to test, and as you can see even with this red candle here, we could be coming back down to test all these areas again and see if this base is actually holding. But there is a bit of a caveat. On this side here, we are looking as though we're starting to form higher highs and higher lows in the lagging indicator. So things are looking like they're getting a bit better, but Tenkan-sen is still below the baseline at this point here, and we're still below a lot of these resistance areas as well too. So what's this space? Silver, similar situation overall as well too, but looking as though things are starting to improve. Copper, interesting story still. Yes, it's above the VWAP, the yearly VWAP that is. It's also above the quarterly VWAP. Things are looking a little bit more stable. That's good for the overall market, decent in terms of technology, but at the same time still struggling in relation to the short-term moving averages and also the 50-day moving average. So still a lot of work to do. It needs to hammer out this area that it's actually working on in terms of its base and seeing whether or not this higher high, higher low will actually confirm itself and actually get above all of these short-term moving averages. Another wait and see area. Iron ore, still looking dreadful. That's just the best way of putting it. Lower highs, lower lows in the lagging indicator, really struggling against the short-term moving averages, not really finding its feet at this point in time. So iron ore is an area to really, really probably stay away from at this point in time in relation to things at this stage. Bitcoin and Ethereum, as Yash was alluding to overall, looks as though it may be actually starting to stabilize and find its feet as well there too. But in a similar vein to gold and silver at this point in time, still needs to find higher highs and higher lows off this base area as well before we can really say we're out of the woods here as well too. It's got through one of these resistance areas from down here, but what's it going to do afterwards, especially as it hits head on this resistance area here from April 2021? That's the question. Because even with this red candle here in particular, it's finding some resistance at this stage, may come down, possibly come back down here to test this area here or test one of these short-term moving averages, and then form that higher low and then bounce up and then test it again and then so forth. That will most likely be the scenario, and then we'll see how the market reacts to all of those areas. That will probably be the most likely scenario. But at the moment, looking reasonable, at least in terms of hammering out a base. Similar kind of situation with Ethereum as well. More pronounced with Ethereum. And the reason why I say that is because we're also contending with this 50-day moving average right now. And at this point in time, it's respecting that 50-day moving average. So let's see what it does. If it respects it, comes down, falls flat in its face, point proven. But it could actually respect it and then also bounce off these and then potentially even go right through that all. Then at least you've got some proof that it's actually got some strength and bouncing right through. So once again, watch this space. A lot of this is basically just testing at this point, trying to find some strength, trying to find where to go one way or the other. But the big thing that's actually finding some, I suppose, resilience in the market overall is the mere fact that our volatility aspect is actually looking pretty good. Even with all the media ramping it up and going, oh my gosh, the markets are all so volatile and everything. No, they're not. We are not in a volatile market. If we were in a volatile market, our VIX readings would be way up here in the 23s, 25s, up to the 30s. This is not a volatile market by any stretch of the imagination. We would be having bid-ask spreads as wide as a truck if we were in a volatile market. We are nowhere near that circumstance. We'd need to go back many years, back to COVID era and all those kind of things there to be really seeing volatile markets. We are nowhere near that. So overall, anyone who tells you we're in a volatile market has obviously not been trading for very long. We need to basically see a lot more strange activity to really say we're in a volatile market. Right now, everything's really calm. We could see still a lot of price action moving around in certain individual instruments, absolutely. But in the general scheme of things, there's no major panic. No one's going out there and buying large amounts of put protection or anything along those lines there, apart from maybe certain instruments, of course. But in the general scheme of things are relatively calm. Until you start seeing this really spiking upwards, we are actually in extremely calm markets. So keep an eye on this as a gauge as to what's going on overall too. But the interesting thing overall is the dollar. The dollar is still remaining really stubborn. And this would probably be your barometer as to exactly what is going on in terms of whether or not people are getting more and more averse from the markets as well. If this all of a sudden spikes up, probably use this, maybe even compared to the VIX, in terms of really seeing whether or not something is actually going dramatically wrong with the markets. Because there's some really strange dynamics going on in the markets in general that may not be 100% explained by the VIX in the grand scheme of things, especially as you've got the TLT doing some really weird and strange things overall as well. So a lot of things to really keep an eye on overall, especially as we've also got Brent crude continuing just to basically sink and sink. This really is not finding any support at this point in time. And at this stage, who knows where it will find the support overall. But do keep an eye as to whether or not this is actually just keeping on tracking the short-term moving averages and whether it actually bounces up through those short-term moving averages to give you an idea as to exactly where it might stop in terms of finding its base as well. But with that, I think that's pretty much about all we need to really cover, I think, with all of the things we normally do cover. Above all, it still maintains the same situation that we normally have in terms of really keeping an eye on your levels with your individual positions and obviously keep an eye on some of those interesting dynamics that we have going as well in terms of the levels and the indices. But really, I think the theme of the day and the theme of the week that we really have is essentially stock rotation, the sector rotation that's really going on overall, and keeping an eye as to what's going on in the general indices as well there too. With that, mate, I'll pass it right back to you. And we'll see everyone midweek. With our apologies for the delay of what's been going on with this particular release. Unfortunately, some technical issues have got us this time around here, but we'll aim to get this out as soon as we possibly can.
Thank you so much, Steve. And yes, to see Swine, apologies, guys. There was a technical issue, so we have had to re-record and get this done on our Monday night so we can get this out Tuesday morning. But with that being said, and all things considered, there is a bit more of a cooling narrative on the AI trade. We've been covering that for the past weeks, and I'm glad that we've been close to possibly catching a reversal. We'll
Right.
see how the next couple of weeks play out. But yes, with China manufacturing chips for cheaper aspects, a lot of people getting too excited. There's been a lot of publishings, even in terms of work environments, not pushing AI as fast because they are running out of credits and AI's ability to check its own work and to just keep using GPU power without validation of its work is concerning as well. So those things and AI being ready to progress forward and being a bit overheated right now, all things are in consideration. But do other narratives such as crypto now have a little bit more of a room to run and have a little bit of a rotation opportunity from tech and AI into crypto? We've been discussing that as a rotation aspect too, and we will
Right.
keep you posted on that too.
And that
But
reminded me too, actually, whilst we're talking about that, Super Micro, they actually had an investigation from their own government as well. Remember that one?
yeah.
So there was something there that actually had a bit of I think they fell about 8% or something in one day from that investigation too. So there's lots going on, so many dynamics.
Yes. So
Mm,
with that being said, thank you so much for joining in for this week's session. If you've
right.
liked what you have seen today, please drop us a like. It goes a long way towards us pushing more content in the future. If there's anything you'd like us to cover and do differently, always the comment section down there. For
Absolutely.
today's word, let's put the word Micron into the comments down there. Thank you so much for your continued support, Mark. We appreciate you. And yes, it is good to be back. It's a good break. And on that, if you enjoy the journey, please feel free to give us a subscribe and come along the journey with us. Thank you for joining this particular session, and we will see you on the next one.
Absolutely. See you then. Bye for now.